Hello, and welcome back to this week's market update. Today is Tuesday, February 20th, 2024, and it was a very important week with some key inflationary data, so we'll jump right in. Market slipped last week as a hotter than expected CPI print sparked a heavy sell-off on Tuesday. You can see here, leaving the S&P 500 lower nearly 1.4% just in that one day there. As of close on Friday, February 16th, the Dow was down just a slight 0.07%, the S&P 500 down about 0.3%, the Barclays Aggregate Bond Index down 0.55% on the week as yields were rising, and then the Nasdaq Composite down 1.25% for last week. Heading into our economic updates from last week, we got the January CPI print. As you might have seen, came in much hotter than expected at an annual rate of 3.1% year over year, which was a slight decrease here, as you can see from December's 3.4% headline rate, and then core CPI for January came in at 3.9% from a year ago, and that was no change from December's figure. So despite that it was a slight decrease here in this headline number from the month of December, both metrics were hotter than expected, which sent the stock market into a sell-off on Tuesday, declining by just about 1.4% by close. Looking into the data points that drove the CPI print, we had transportation services seeing the hottest year-over-year inflation of 9.5%, and that was largely driven by increases in auto insurance rates in December. So that carried over there. We also saw shelter up 6% from a year ago, and then last but not least, food away from home was up quite a bit, 5.1% from a year ago. But good news is, for groceries, that only rose 1.2% from a year ago. So a little bit less inflation that you're hopefully seeing in the grocery store. On the other hand, we saw energy prices as a whole fall 4.6% from a year ago, and used vehicles also fall 3.5% from a year ago. So interesting stuff there to see kind of how the CPI breaks down, but good to know as we look into this next inflationary data point from last week. Alongside the CPI print, we get the PPI print, or the Producer Price Index, as well. That showed just under a 1% increase in prices from a year ago in January, and a 2.6% increase in the core PPI, which is everything less food, energy, and trade costs. So that was quite good on the annual front. But then when you look at the monthly changes here, you can see headline was about 0.3%. The core PPI rose 0.6%, and pretty much all of that came from services, which as a whole rose 0.6%, with the other services category leading by almost a full percent increase in prices month over month. So interesting stuff on the PPI print. Overall pretty positive, but does follow the CPI coming in a little bit hotter than expected. Alongside the worse than expected inflationary readings, we also got retail sales lower than expected for the month of January. So economists were expecting about a 0.4% monthly drop. Instead, we got twice that at a 0.8% month over month drop in the month of January. So coming out of the holiday season, quite a pullback in consumer spending on goods and services. We look at from a year ago, retail sales were up just 0.6%, so quite modest on that front, 0.6%. And that was led by non-store retail, which includes online shopping, which was up at 6.4% from a year ago, as well as food and beverage sales, which were also up 6.3% from a year ago. So certain categories have really run away in terms of retail sales. On the other hand, we see things like furniture sales down almost 10% from a year ago, building materials down 8% from a year ago, and department store sales down 6.7% from a year ago. So just a very dynamic picture of how consumers are changing their purchasing decisions, especially following the holiday season. Final update of the week here is our Consumer Sentiment Index from the University of Michigan. Showed a 13.3% increase in consumer sentiment in the month of January, which was up 21.7% from January of 2023. So consumers are definitely feeling much more positive about the current economic conditions, though, when we look at the future business conditions survey, also included in this index, 41% of consumers were optimistic about future business conditions, while a greater majority, 48%, held more pessimistic views on future business conditions. So it's very interesting how, despite being more positive about current conditions, there are still a large portion of consumers kind of cautious about future business conditions to come. So overall, good story here. We're at the highest point of consumer confidence since July of 2021, so that's always good news there. And consumers are feeling much better about the economy. We have seen the stock market hit all-time highs a few times so far in the new year, and that could lead to it as well. That could be a cause of it as well. And yeah, great news on consumer sentiment. So thank you for tuning in to our market update this week, and we look forward to seeing you next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.